Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended lower amid a sell-off in tech sector. In the US, S&P 500 and Nasdaq Composite recorded their steepest single-day declines since 2022, recording weekly declines despite recouping some losses on Friday. Asian equities trended lower, dragged down by Taiwan, Korea, China and Hong Kong, which saw a fall of around 2 to 4% on continued foreign investor outflows. China's on-budget fiscal revenue growth remained subdued in the month of June on falling tax revenue growth, while augmented fiscal deficit remained largely stable. The Chinese central bank surprised markets by policy rate easing, while the government announced measures to promote large-scale trade-in program through borrowing of 300 billion yuan in ultra-long special treasury bonds to boost large-scale equipment renewals and replace old consumer goods with new ones, while also expanding the coverage to multiple sectors. Back home, Indian equities came under pressure following the union budget announcements amid changes to capital gains tax on various asset classes and withdrawal of indexation benefit. However, sentiments recovered later. The Nifty index made new all-time highs, up 1.2% for the week, led by positive global cues that included better than expected US GDP growth data for the second quarter of 2024, expectations of an early rate cut by the US Fed. Broader markets outperformed the Nifty index, with Nifty Midcap Index up 3.3%, whilst Nifty Small Cap Index was up 2.5% for the week. Among sectors, pharma and auto led the winners with gains of over 5.2% for the week, while realty and bank led the losers with cuts of over 1.7% for the week. The Indian fixed income market had another decent week, with government bond yields falling across the curve after the Union Budget Fiscal 2025 stuck to fiscal consolidation path. Yields at the shorter end of the curve fell more than yields at the longer end, driven primarily by a sharp reduction in Treasury bill issuances, while the bond borrowing program only saw a marginal cut. The 10-year Indian government bond yields fell 2 basis points to close at 6.94%, while the 3-year and 5-year government bond yields fell 5 basis points and 8 basis points respectively. In commodities, gold fell 7% for the week after government reduced custom duty on gold from 15% to 6%. Brent crude oil fell more than 1% on Friday to close at $81.1 per barrel, posting a weekly decline of 2% as worries about demand in China following the surprise rate cuts by the central bank outweighed the strong economic growth in the US. The INR depreciated against the USD by 0.1% for the week to close at a new all-time low of 83.72, driven by weakness in yuan, foreign investor sell-off in domestic equities, strong dollar demand from domestic importers, and tepid response from domestic banks. Coming to the macro update, the Union government presented the final budget for fiscal 2025, its first key policy announcement post the recent elections. On a broad level, the budget took steps to support a broad-based growth while staying the course on fiscal consolidation. Notably, the government increased social welfare spending, largely directed towards youth skilling and employment, improving women participation in labor force, supporting MSMEs and agriculture. The government also continued focus on investment-led growth. Capital expenditure was maintained at 3.4% of the GDP to support infrastructure, railways, housing for all, developing emerging cities, boosting the manufacturing ecosystem, and transition to renewable energy. The budget also maintained fiscal prudence by revising lower its fiscal 2025 budget deficit to 4.9% of the GDP compared to 5.1% in the interim budget, and reiterated its commitment to fiscal consolidation by bringing down the deficit to 4.5% by 2026 and lowering government debt over the medium term. The budget also rationalized taxation. It made changes to benefit low-income individuals, foreign corporate entities, and angel investors. In a surprise move, the budget standardized capital gains tax across asset classes, with the long-term capital gains tax raised to 12.5% from 10% earlier, while the short-term capital gains tax was raised to 20% from 15% earlier. Indexation benefit was also withdrawn from all asset classes. The budget finally acknowledged the need for reforms. It promised to set up a policy framework for long-term economic development, to set the scope for next generation of factor market reform in conjunction with the state governments. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.